Hey guys, how's it going? Welcome to the North Investor. With all these high prices on the market, you might be wondering, but where should I invest my money in 2022? Well, in this video, you will find the answer to this question. If you're trying to add ETFs to your current portfolio, or if you're trying to create a new ETFs portfolio, I will share with you today what are my top Canadian ETFs that you should buy in 2022. Before to share with you what are my picks, I will tell you what are my evaluation criteria when I decide to pick or not an exchange trade funds. First thing first, when I want to pick a fund, what I do is basically I look at the asset allocation, so to see what my fund is invest into. For example, I could decide to have a majority bond fund, so basically a fund which is a majority invest into bonds, or I could decide, for example, to have a mixed ponderation between bonds and equities, or more in equities fund. So basically, personally, I will prefer to invest straight into an equity ETF if I decide to invest into an ETF, because I see that right now, and I consider that right now, the bonds market is pretty dead and it's pretty worthless because of the current yields that doesn't even surpass the current inflation. To me, the bonds are pretty useless at the moment. I prefer to invest, for example, in value stock compared to bonds. So obviously that always depends on your situation, but that's my personal point of view. Usually I also try to have a lot of equities and a lot also of cash, because I predict in 2022 that there will be a big correction or certain correction on the market. So I'm going to try and look for certain ETFs that will have a lot of cash. After, I will take a look at the past performance versus the volatility or the risk of the fund. This will help me to solidify my decision, because the past performance will show how the fund performed in the past, but unfortunately for the more recent funds, we don't necessarily have the data to find this information. I will also look at where is the fund invest. So in which countries is the fund invest? Personally, I'm trying to stay more in North America and a little bit in Europe, but I really try to focus mainly on North American companies. Finally, I will take a look at the management expenses ratio to help me see what is the cost to have this fund. And also I will take a look finally at the one of the criteria that is forget a lot by the investor, but who is managing the fund. The first fund is the Vanguard All Equity portfolio with the ticker VEQT. First of all, I must say that I love how Vanguard are managing their funds. In this fund, this is really a one in all. So you have one fund, and in this fund, you have 4 Vanguard funds. So if you want diversification, well, you got it. Plus, in his name, we can see that it's all equity. So what I'm looking for is really some funds where there is a lot of equities, and in this case 99.98% of the fund is all equities, and the rest, so the 0.2%, is about cash. This ETF has more than 13,000 stocks in it, which are mainly some large market cap stocks, more than 80% of all the portfolio. Plus, the predominant sectors are the technology, followed by the financials. However, we can see that there is a great balance between all the different sectors in the portfolio. And we can see that the main stock of this ETF are blue chips like Apple, Microsoft, or Shopify. The market cap of this ETF is around $180 billion, and its main investments are located through Canada and the US, but also a small portion of it is around the Asia and in Europe. The MER is only 0.25%, and its distribution yield is around 1.27%. This fund that has been created in 2019 is super new, so it doesn't have much information on the past return and the volatility. However, we know that at the moment, during the last year, we had seen a 20% return, which is pretty incredible. The only criticism that I could have for this fund is basically that they have such a low part of liquidity that if they have to face like a crash or a big situation on the market, they will potentially have to sell some of their parts to be able to rebuy some other parts or whatever. So that's gonna be problems, I think, but except that, everything is pretty good with this fund. It's well diversified. It have also some value stock, but also some growth stock, so it can hedge against the inflation and against different things. So I think that on my personal point of view, this is one of the best ETF on the Canadian stock exchange that you could potentially buy. The second fund that I'm about to share with you is basically a replication of the S&P 500, which is one of the major index in the US that include the 500 biggest companies in terms of market cap. So it is the iShare S&P 500, or the ticket IVV. So basically, I think that it's quite important to include such an ETF in my list because historically the S&P has provided a 7% return yearly on their investment, and this year has been a pretty great year for the growth investment, and we've seen that the S&P have provided about 30% of return, and our fund has been quite close to it, so it performed pretty well. However, we can see that the volatility is pretty high, about 18%, but we know that this fund has only 0.3% of MER, which is very low compared to, for example, our previous ETF. And this is linked to the fact that some passive managed funds like that cost way less than some active managed funds like we saw earlier, because the active managed fund need to be consistently rebalance. In this passive fund, basically it is just reproducing the S&P 500. So they take the 500 biggest companies and they try to have the same ponderation as we can see with the main stocks that are in this ETF, but they try to take the same ponderation as the big index that will serve as the benchmark to evaluate the performance of this ETF. This is why Apple, Microsoft, Amazon, and Tesla are some of the most important holdings in this ETF. Also, we can see that more than 30% of its holding is straight into the technology side, with about 13% into the health sector. So for those that would want to invest straight into the S&P 500 and that would want to buy, for example, different stocks but are not able to afford them, for example, Amazon, which is about $3,400 just for one share, well, I think that those kind of stocks, those kind of ETFs are the best, and personally I think that this one is the perfect S&P 500 tracker for the Canadian market. I also think that the risk reward is pretty good, so like I know that the risk could be pretty high with about 20% of volatility as we saw, but the return on the investment could be very good also if the growth follow. And also the fact that the cost of these kind of funds are super cheap makes them even more interesting for different investors. For my last pick, I wanted to make a 2-in-1. So 2 funds for 1. And I wanted to choose 2 funds that were not necessarily known by many people, but that, in my opinion, have a great future ahead of them. So I'm going to talk about crypto funds, more precisely about the 2 most important crypto, so the Bitcoin and the Ethereum funds that are the best on the Canadian market. So I wanted to talk about those funds basically because in the past decade, we've seen that the Bitcoin was the best investment in terms of return. However, we've seen also that it is one of the most volatile investment that you can do. So one of the most, I'd say, risky investment that you can have. However, we have seen some studies coming in the past month that have shown and that have potentially show some evidence that the Bitcoin could be an inflation hedge, which would be very interesting, and that also the Bitcoin would have a low correlation with the traditional market investment. So that will show to the investor that, for example, if the stock market goes up, well, the Bitcoin could go down, and vice versa. So if the Bitcoin goes up, well, the stock market goes down. So it really diversify your portfolio to, if you want to include some Bitcoin. Also, the ETF would be the best choice for the people that wants to hold some part of Bitcoin or Ethereum, but that don't want to take the risk to get hacked, for example. And those ETFs actually offer a cold wallet storage, which means that your Bitcoin and your Ethereum will be protected from any kind of hacks that could happen. Just a quick remember for those who wouldn't know, the Bitcoin is like a digital asset, just like gold. So basically, it could be considered as a currency, and it can be traded between different individuals. So the big advantage of it is that it's super simple, but at the same time it is super secure. So it hasn't been hacked in 10 years since its creation. However, the thing is that the system is still super slow because it is a mining system and it's very complex, but basically it is super slow. I'm gonna keep it simple just for you guys. And the Ethereum on the upper hand is super complex, and it's a program just like a computer. So it is a program, but it makes that the thing are going super fast. The transaction could be super fast, but the thing is that because it is super complex, it is less secure than the Bitcoin, and it will cost more than the Bitcoin. So it has a lot of gas fees that it's called that are way higher than the Bitcoin, for example. Those two funds doesn't have any special holdings, only Bitcoin and only Ethereum. So the Bitcoin fund is basically the purpose Bitcoin fund, or on the ticket BTCC, which is actually the first Bitcoin fund that has ever been created. Its market cap is around $2 billion, which is equal to around 30,000 Bitcoins. And all those Bitcoins are on a cold storage wallet, which, as I told you earlier, is there to just restrain the Bitcoin and to protect the Bitcoin against the potential hacker. And also the MER of this fund is quite higher than the other one, and it's around 1% for the funds of Bitcoin. And the Ethereum fund is on the ticker QETHU with a market cap of around $700 billion and around 1.5 of management fees. In conclusion, the ETFs are a great way to have a lot of diversification at a super low cost. For example, for people that doesn't really necessarily want to follow and track their investment through years, well, you can buy some ETFs, some active managed funds, or even some passive managed funds like the S&P 500, and just buy some of it a little bit each month, for example, and let it grow through times. And it's a great investment. The risk reward is pretty great as well. But for everyone that would like to invest in the stock market, I really invite you to go check out my last video on what are the top 2 meta stocks that you need to buy in 2022. I will see you there. It's going to be just right over here.